Hello and welcome again to Stocks Advisor channel. Today we will talk about BIDU Incorporated, traded at Nasdaq, ticker name BIDU. And BIDU is of course in the major correction and the bouncing decline, and I really love this kind of charts because they are already formed, they are very easy to understand, very predictive in their move, and of course also very profity if you enter in time. And that's exactly time to do it with BIDU. So what is important here, it's the fact that the stock is doing the bouncing decline. It means that if this is the let's say the declining trend, it just drops like this, and you can at every bounce make a profit. And you can here see it's already second bounce almost finished, and you can rebounce any moment again. So to understand how to play here, let's do a quick analysis for BIDU. As first, we do start with moving averages explanation. We have here 3 moving averages depicted. These are moving averages 20, 50, and 200, being green, blue, and red line correspondingly. Here on the left, you see their legends. So if you look at them, you see moving average 20 is already declining completely from beginning of March. And recently we formed 4 trading sessions ago the magic cross down here, meaning that the price of moving, the move actually of SMA 20 hit from the top let's say evolution of SMA 50, and this caused extra price decline. And actually also moving average 20 classically worked here as a resist line, forming the upper resist channel of decline, which again confirms which is the bouncing decline within the channel of bounce, perfectly formed, very clear pattern. Let's call it R1, R2. So how to play on these kind of bounces? Of course, you just try to enter at the lower part, closer to the bottom, and then you resell at the top part. So in that sense, following this picture, you just need to catch the next bounce, which will be right now, and you prepare for yourself to rebounce again. Still, giving the fact that tomorrow is still end of trading week, it could be a little bit piercing lower, because also there is a channel of volatility or previous accumulation between 190 to 100. You can see it here. So this would form actually for us the next entry position. Let's put it a little bit higher than 200. It will be about actually 204, being also the bottom of today's candle. So with this being said, this is the first level to enter with an immediate buy call here, and this would be therefore between actually 200 and 190. So let's draw it here and let's write it here as well. So this would be 190 to 204. I won't write cents because this is already quite big numbers already here. So it's 190 to 104 to enter, and then the target would be of course R1, so you can rebounce here and make quite nice profit up to 10%. Here on these kind of charts, we advise taking profit between 10 to 15%. Then you can either re-enter or check other opportunities. Also at our channel you can find plenty of videos even up to 5 weeks ago. They are still fresh, in the sense that the situation discussed there could be just happening, especially if we speak of the lower levels of entry and average down. So in that sense, it's quite simple play. If we rebound further, one of the possibilities is that we will slightly descend with volatility at R1 and then going higher. This way we will form an upper trading channel using the current let's say volatility channel, let's name it V1, V2 as the bottom, and upper one will be formed most probably at around 270. So that would be for mid-long term traders then let's say the price target. But also what might happen further, if there is negative catalyst or some breakage of this decline channel further lower, we might decline a little bit again. Still possible, especially not forgetting that the price changed for the company from November to, let's say, end of February between 130 level to 160, so 3 times, but still it's a big market capitalization company, so you would expect some let's say rebounces if there's a big decline. So it's not definitely it's not a penny stock here. So this is one situation. What is also still saying that is probably we are close to rebounds is the RSI and MACD. Looking at RSI, you see we're almost in the oversold area. So then this will create very positive upward pressure. MACD is really beautiful after having double decline negative wave and then almost recovery. We're going for second bigger decline, and once this negative wave will start bottoming, it would mean the strong rebounds is taking place. It might be happening already from tomorrow. We might be bottoming and then making the swing up, or it might a little bit take longer and we could break this channel. If this is happening, it will be just even more, actually a stronger entry. And then of course it will be just at these levels that you can see between 160, 170 exactly. And why it's very nice level 2, because moving average 200 by that time will be higher than it, forming it as a very strong double support channel for us, still possibly entering due to just technical most technical volatilities of the major corrections. So these two levels will make it a technical volatility, and whenever the rebounds takes place, 10 to 15% is the profit target. If you're a daily trader, if you're a more midterm trader, let's say, and we really go to the second channel of entry, you could wait until V1, V2, or even R1 for midterm level. So this, of course, will make a bigger profit, but it might take also longer time. Still, what we need to anticipate is a negative catalyst. Again, imagine we break the channel, we sit on moving average 200, and then some negative catalyst kicks in. If this is going to happen, we might decline severely to the principal levels, and here it's not that we anticipate this price action, but it is just, let's say, preparing for the worst, preparing for the doomsday. It's better to be always prepared. If it happens, if not, it's okay, you take your profit. But if it's happening while others will be taking losses, you will be just entering. And the reason we give this channel as a doomsday entry for negative catalyst, because it's kind of a top of the previous trading, let's say, history for the half year, and also it's the formation level by November, end of October, and is a very principal level as well for support. This, therefore, the level between 130-40 would be kind of a mitigator for very bad news, if any. If not, it's okay. We just keep some funds to average down there if needed. So this would be 130, 140, and this is exactly within our mixed analysis strategy, meaning that we do work and predict and analyze stocks based on three pillars. It's technical analysis. Second one is non-linear averaging down based on support resist levels. That's what we do here. And the third one is taking into account and actually mitigating possible negative catalysts. This is usually what is not done by traditional trading, but we do it because we don't want to take losses. We don't want to do stop loss. We want to spend a little bit more time if needed, but still exit with a profit. And mitigate all possible risks, because once you mitigate all risks, what is left is taking profit, or at least exiting with a draw in the worst case scenario. So this is exactly that situation. And again, whenever you take profit, 10 to 15% from all funds allocated in this position is advised. If you are going for more midterm, you could of course stay longer, but then it's up to you. So with this being said, this is the numerical card to trade. Still, average down is classical 1 to 2, meaning it's 5 portions play. What does it mean? It means that the money you would like to play here, you can split in 5 portions. You can buy with first portion in the first channel, then you can average down with 2 portions in the second channel, and if negative catalyst comes, you can again average down with 2 portions in the third channel. So this is the numerical card. If you're more for graphical representation, you could look at here. Overall, this is what we call the trading card. You can use it as a print screen and then check it kind of as a guidance. Keep it as a guidance for trading for this stock. That's all at the moment for BIDU. Quite nice stock, although in correction, but the chart is beautiful, classical, almost academical example on how to enter on correcting charts and make the profit there. So with this being said, good luck and see you at another episodes of Stocks Advisor channel.